Hey everybody, welcome to Around the Coin. Today is a special day. We have on the show guest Matthew Mezinskis. Boy, I should have asked you how to pronounce your last name before we started. How do you pronounce your last name, Matthew?
The American way would be Mezinskis, but in Latvian the Z is soft, so it would be Mezinskis. So it's confusing enough. Don't worry about it.
Yeah, I like that. Mezinskis. And Matthew, you're dialing in from Latvia right now, and you float between Latvia and Lithuania. And we were talking pre-show. You've been out there for 10 years, which is amazing. Connected through a mutual friend, and you're just immersed in the world of Bitcoin, blockchain, and had been speaking on a few panels. And excited to dive in today. But can you remind me, and for those listening, what's the business in Latvia? How did you get to be a 10-year resident of Latvia out there?
Yeah, Mike. So thanks for having me on. And as far as the background of Latvia goes, it started out with family. My father is Latvian, mother's American, and I basically just made the decision after college, which was almost 11 years ago now, to make the trip, explore family roots, and see what was going on over there. So I did that. And it was originally, honestly, going to be about 3-4 months. 11 years later, I'm still here. I started out in finance and being an analyst, basically, for a real estate company over here. And I actually have been able in the last 5 years to become a financial consultant / analyst for a variety of companies, investors, some Latvians, some Americans, and it basically is a fancy way of saying I play around in Excel and Google Sheets all day, making models and forecasts and working with banks and things like that. But it's sort of it's an interesting gig. I've been able to be kind of independent. It's something I may have not been able to do in the U.S. There's a cost of living difference over here, and it's also given me some independence. So that's my background in a nutshell. It's I'm definitely interested in finance and economics and money and sort of the origins and all that stuff. But I do have just a traditional, finance background. As far as Bitcoin and blockchain, just to wrap that up, everybody has their own story about how they discovered it. I did discover it in the early days, early 2011. The price was some sub $10. Everybody has their own story.
Tell me you bought like 10 grand in Bitcoin in 2011.
Yeah, I think if I did, I would probably be talking to you from the Mediterranean and not from here. So, everybody has their own story about that as well. It's interesting, I know, and it's fascinating for some people the way that it has worked out. I did not get in that early. I was very skeptical, very uncertain. Normally, I do like to take those flyers, but I didn't. You had to send your money to Japan pretty much at the time, so it was early days. But I followed it, and basically, at some point, you go down the rabbit hole. You read as much as you can, and you just get hooked. And just, I guess, the final thing is, in the last year, I was thinking, with what I'm doing with my consulting gig, looking at numbers all day, reading about Bitcoin, and I'm sort of out there in the ether in Eastern Europe. It's these are small markets. I don't go to North American Bitcoin conferences and some of these large gatherings. I have been to a couple, have talked to some people that are big in the space, but I just wanted to do something creative, and I have dabbled in voice work a little bit. I've read some. Still on the economics and finance thing, I read it's a book called The History of Money and Banking in the United States. Mm-hmm. It's by Murray Rothbard. He's a sort of free market economist. Done some other things, ads, whatever. But I just hadn't done it full time. I needed something to anchor, something creative. And so I figured, why don't I create sort of an audio blog, audio book on blockchain and cryptocurrency and Bitcoin. And so I did that. I started it just literally in January. It's called Crypto Voices. And I'm basically narrating articles by experts, enthusiasts in the space. From a bit higher level, it's definitely educationally focused. Focusing on technology, focusing on legal aspects, investment aspects, some market, political aspects. I actually have those 4 categories. So it's that's just what I decided to do, and try to get back into voice work a little bit as well. So that's the
That's
story
awesome.
there.
Out of those four categories, which seem to have the strongest feedback or listenership interest?
Well, I've it's funny. I never even tweeted before this project, and I started a Twitter account. First it was my mom following me, and it's growing, and it's slowly
Nice.
growing. It's quite good. The feedback I've been very happy with both the authors. One of the reasons why I did it is because I haven't really spoken out in the space, though I've been reading and following since 2011. I wanted to talk to some of these people and some of these people that are blogging, and mostly people have been pretty, actually almost entirely. I've had one person claim copyright, and I contact everybody before I publish them. But mostly everybody's been very happy and very excited to have sort of another channel, to put their blog or their research in audio form. So it's been nice.
You're effectively offering them the audiobook distribution and exposure for free.
Exactly,
Right?
and that was the idea. I didn't want it to be sort of. Obviously, there's plenty of podcasts out there on Bitcoin, and maybe I'll get into interviews or something in the future. But just to start with something concrete, something clear, no stream of consciousness. I just wanted to, put some music to it from another mutual friend of ours, I think, and just started with that.
That's awesome. So now, where is it today? How many have you done? How many audio versions of?
Yeah. So I call them chapters, and I'm up to, I think, 26. I just released 2 a week. It'll stay like that for a while, I think. I have, for example, I have a 4-part one that's going to go for the next 2 weeks. It's by a guy named Chris Pacia. He's involved with Open Bazaar, which is a big Bitcoin sort of decentralized eBay project. And he's written a lot of stuff in the early days. And the stuff that I'm reading actually is from 2013. It's, explain ELI5, explain like M5 series on Bitcoin. And it's fantastic. Like it's just as valid today as it was, a couple of years ago. And it's just, the experts, the people that know everything they need to know about blockchain, they won't probably be listening. But, if you're someone new and you just want to get in and hear something about it, you don't know anything about backing up your private keys or cryptography or the blockchain or how it works, like stuff like that's really interesting. So I'll definitely keep up this model until text to speech becomes so good.
I don't even know. I mean, you could also go through in a way. You sort of remind me how there's a podcast I love called Hardcore History by Dan Carlin, and he basically recites history books, but he does it in a way where he'll read a passage and then he'll give a narration on top of that and talk about what this could mean, how to interpret it for today, maybe break it down for layman's terms. So almost what you're doing is taking fairly complex pieces and articles written by the experts, maybe even the builders and creators of the specific technologies, and then breaking them down so people can understand it, almost like you're explaining to someone at a bar or restaurant in layman's terms. And I think that kind of idea synthesis really hones in for most people, where they're able to remember the core ideas instead of getting caught up in the specificities of nomenclature and everything else that most people get lost in on their way down the rabbit hole. So that's awesome. I commend you. That's fantastic work. I think it's much needed for sure.
Well, thanks. That's very interesting. I'll have to check out that work as well. That's an interesting way to do it. A little commentary.
Yeah. So kind of in your discovery of, say, the last few years, or combination of the 26 chapters that you've done, what areas seem to pop out? I know if you were to break them down into maybe Bitcoin specific, other cryptocurrencies, the blockchain as a whole, what area do you find the most interesting and with the most potential?
Yeah, I think that's a good question. Bitcoin, especially, there's this block size debate that's going on now, and we can certainly get into that. But Bitcoin, blockchain, distributed ledger technology, they mean a lot of different things to a lot of different people. If you've been in the space for a long time, you get deep on the Twitter feeds. You can see a lot of passion, a lot of emotion, a lot of vitriol, even on what people think should be the best way for Bitcoin to scale, for blockchain to scale. But I guess first and foremost, I mentioned, some my sort of economic monetary interests. Like I'm just passionate about, like personal liberty, the free market. I think that, eventually information wants to be free, and people, want to, they want good products and services. And as long as the market works efficiently, I think that we'll get there. Bitcoin has some scaling issues right now, but I think that it will get there. But just to sort of back it up to answer your question, I think money still is the killer app of Bitcoin today. I mean, I know this is your guys' space, and you sort of do even more concrete, interviews and talks with companies in the centralized payments world, for example, and the decentralized. I know you talk about Bitcoin as well, but it's still far out there for many people. But still, really, the killer app today in blockchain is money. And it's difficult. It has to be easy. It has to be user-friendly. And it's very, very difficult. It's the same reason I started Crypto Voices. Like, if you asked me 5 years ago if I would start a podcast called Crypto Voices, like, I'm not a cryptographer. I'm not a coder. I had no interest in cryptography before Bitcoin, before blockchain. But, like, the fact of the matter is this, what Satoshi did, the founder of Bitcoin, the creator of Bitcoin, is he created a digital asset that was linked to real world value in terms of spending processing power, spending electricity. So you have this very interesting game theory sort of system that never happened. You have a digital asset where miners spending electricity are trying to earn not real, but digital assets. It's just never been done before. We've had digital assets, domain names are probably the most famous. That was a digital asset that existed out there in the ether, but it was centralized. There's horror stories about different, DNS servers and things like that. But this idea of blockchain, Bitcoin, digital ledger technology, a digital asset being secured by physical resources, it's just something completely new and different. And at the end of the day, we're still talking about money. So I think currency is the killer app. The only issue is time and adoption and ease of use. Even today.
I was gonna go ahead and finish your point there.
Yeah. I'll just say is even today, you tell the average person like, okay, Bitcoin is this thing. It's like email. No one controls it. It's email on steroids with money. You transfer value. That's it. But you say like, okay, all you have to do is, back up your private keys, maybe put them on a piece of paper, maybe put them in a safe. Like the second you say back up your private keys, like you've lost 99% of your audience.
Yes. Anything that breaks the traditional is sort of like conscious pathway from a bank. We can go from, it's funny even looking at banks today, which are these giant, structures in downtown areas that are, have massive pillars, and they really demonstrate the value to us of security. And I think today when people sign up for a bank, they're not looking for security, number one, they're looking for probably, reduced cost or convenience, but it's certainly not, they're not worried, are you going to lose my money like they were in the late 30s and 1940s. So I think you're spot on there. I wonder, the one question I have for you after synthesizing all these articles and diving into it, do you think Bitcoin itself is the train to be on as far as stored value and the ability to exchange value, or do you think the newly developed application-specific call it tokens, if you will, are going to be the future of how people exchange, or do you think we'll be in this world of one dominant player and hundreds and hundreds of smaller players, almost in a way how maybe English is around the world, where you have one dominant language, but also you have hundreds of other successful languages providing value in sort of the little microclimates. What are your thoughts there? I mean, maybe that's shifted over the last few years. I still think Bitcoin carries the largest conscious attention of those not necessarily deep in the cryptocurrency world.
Yeah, no, absolutely. My answer to that question is yes. I think that like you said, Bitcoin is the dominant cryptocurrency. It's the first mover. It has the biggest network effect. It has the most developers working around it. It's the most, the media, when you hear digital currency, like it's going to be Bitcoin. It's not, it may be Ethereum, it may be a token on Ethereum, it may be Dash or Monero, but it's pretty much going to be Bitcoin. So at least today, Bitcoin is like, the king to be dethroned, and I don't want it to be dethroned. But certainly there's an argument in the space that like there should only be one. There only needs to be one protocol, one blockchain. It can do everything. I just don't take that zealous of a view. I think that the beauty, like the point about blockchains that really excites me the most is that Bitcoin doesn't exist in a vacuum. And if people see that they're not happy with something that's working on Bitcoin, they can just they can fork it and create their own chain. They can create their own token on Ethereum. And so I definitely think there's going to be, a constellation of these tokens, maybe, circling around Bitcoin for a long time. Now, I do have a couple of the points to add to that because I think it's a very important, question. Usability still is the main thing, and it's just we're so far from it. There are other currencies that want to do a lot. I like Dash. I think they want to do a lot. I like Ethereum. They have a specific roadmap where they're trying to make this decentralized world computer where it's very easy to develop applications on top of it. I think that's a great idea. I think it's a long way out. It's going to be, there's going to be a lot of failures before you find a few successes. But right now, for sure, Bitcoin is the one, and it's going to be the one to, where everybody's trying to beat or to copy. It's going to be that way for a long time. But the cryptocurrency market in the last couple months, I'm paying attention. It's just been, specifically the altcoin market has been screaming. I mean, it's raised like 2 or 3 times, and Bitcoin is actually at. I genuinely don't say this with any sort of keenness. Some people are only altcoin or only Bitcoin. I just want them all to do well. Bitcoin is at its lowest sort of dominance level in the index. It's just dipping below 70% of the global crypto market cap, which is almost 30 billion. So that's the lowest that it's ever been right now.
Hey, that's interesting. I just listened to a podcast by the A16Z and the Andreessen Horowitz podcast, and they had an interesting conversation. Olaf Carlson-Wee was the founder of Polychain, and it's basically a hedge fund that invests directly in cryptocurrencies at the protocol layer. So they're saying effectively, like, hey, if you were to decide, if you're an angel investor and Coinbase just pitched you, you're actually just, and Coinbase is, one of the most successful Bitcoin cryptocurrency startups there are. If you were to have just taken that money and invested it into Bitcoin itself, you'd have done just about the same as investing in Coinbase. And so their thesis is, rather than invest in application specific, let's invest in the actual protocols. And the best way to do that is to basically just buy currency. And so it's interesting that kind of idea. If you think about when the internet came around, could you have invested directly in Linux? No, but if you could, that would have been amazing. It would have paid off tremendously. But now there's this new, because it's in the world of cryptocurrency, with the fact that currency is something you can purchase and buy and hold and sell later, there's this idea that you can purchase it and then hold it, and it could be an investment in itself. And so it's a really interesting concept that if you bet on the whole industry of cryptocurrencies, you probably distribute, with some intelligence, your money around to all the protocol layers and buy up currency and then hold that, which may end up turning out to be the best possible investment, which is interesting because it's also open to anyone, unless there's some minimum investment, which I don't think there is in any protocols or currencies at this time. And then, yes, on top of that, like you mentioned, you can buy and sell and exchange value between any of these. So it's kind of an interesting. It's interesting for anyone. If you're considering investing $5,000 and putting it into I'd call it high risk. Just the fact that you'd have to choose the best currency to buy and hold. But it is interesting in that it just sort of opens up the ability for network effects to grow. So, similar to a social network, we were talking before about Latvia is one of 3 countries in the world that Facebook has not quite really penetrated, and they have their own social network. And social networks, unlike currencies, where as the network effects grows in a social network, the value is usually accumulated at a central point. Think of Facebook is the central point where they're the one making all the money. But cryptocurrencies have this network effect where as the network grows, each individual stakeholder, Bitcoin holder, gains value from that. Their stock grows, and so there's this intense user base. So there's this intense, enthusiastic following of people, which I think really propels this, and probably will turn out to be one of the hugely emerging categories or areas of interest in the next 10, 15 years, where today it's still niche in itself. It doesn't quite capture the headlines like other things do, even in the tech world. I want to jump to blockchain for a minute, because I think there's so many parallels there, and there's so many points of interest that are both applicable to cryptocurrencies, but then even applicable to all sorts of things that aren't even related to money. Do you see a lot of articles coming out, or I should just kick it off with your thoughts on Bitcoin, maybe just, thoughts on blockchain, explaining maybe some of the history there and what your take is on the potential for blockchain as a whole.
Yeah, but first of all, I just want to say I completely agree with everything you just said about the decentralized asset class, and it is bleeding edge technology, and it is high risk. So everybody, certainly not giving any investment advice on that.
There's certainly no investing advice coming out.
But the point about blockchain, that sort of term really kicked off last year, the year before. I definitely am partial to public ledgers like Bitcoin, like Ethereum, like Dash, Monero, Zcash. All of the ideas that basically take, the original Satoshi consensus, the longest chain with the most proof of work, the most processing power. That's the most secure blockchain. And then, through different levels of coding, development, community involvement, you can get some smart contracts, and you can start to do very interesting things in finance and in distributed prediction markets, which is sort of like gambling on anything, like gambling if it's going to be what the weather is going to be next week. And that's maybe a bad example, but on election outcomes. And actually, Ralph Merkle is the creator of Merkle trees, which are used in Bitcoin. He has said, I've heard him say, he thinks prediction markets, which are really only in theory, and people are working on this. There's two, Augur and Gnosis, which are on the Ethereum blockchain. I think very interesting projects. I mean, he has said that prediction markets could be the future of governance, because you're taking value and you're basically pushing it towards decisions that, first of all, questions that people have, not just like what will the weather be, but like, should we build a road here? And then you just sort of see what happens. This is very theoretical at that point, but that's one example. But back to blockchain in general, I think it is still a lot of hype, and it's still early. I've read some articles by the R3 consortium. It's a group of banks that are trying to do things like more deal level, finance specific, loans, derivatives, working with regulators. And I think they're going to, give it a good run, and I think they're going to have some success. Whether it just goes back to this whole idea, like, people think we have one internet, but, we have tons of protocols on the internet. The email protocol, the voice over internet protocol. There's lots of different, HTTP. Like, we have lots of different protocols. So I think the blockchain is just a fancy word for a protocol. Bitcoin is the protocol. It was the first blockchain. It's the protocol with the most value. And we're just going to have to see where it goes from there. I'm totally open to whether they call permissioned like R3 or permissionless like Bitcoin and Ethereum. I think it's totally open. But maybe even just to back it up on where I think like the roadmap. And again, it's like economics. There's an unlimited demand of what people want Bitcoin to be, and it's just a limited supply of Bitcoin and coders and developers. So we'll just have to see. But I categorize Bitcoin's and blockchain, really, their potential sort of use cases in three categories. And I think it's important to use like analog examples like gold. But I think the first is like a currency, digital currency, medium of exchange. That obviously encompasses payments, like you guys talk about, some sort of transfer of value used in trade. so many levels with that, so much to talk about. But I mean, digital currency is definitely one of the things that Bitcoin and blockchain are about. The second is digital gold. And I think, first of all, Bitcoin is not digital currency yet. I mean, we call it that, but any merchant that's accepting Bitcoin, they're just using it as a means of payment. Like, they're still going to price their services in euros, dollars, yen. It's just too volatile at the moment. So Bitcoin is not true digital currency accepted as a means of payment, for a good or service yet. The second thing is digital gold. I think Bitcoin is firmly in this case right now. I mean, it's a store of value. The average Bitcoin payment is something like $1,000. The median may be something like $200, but the average Bitcoin payment is something like $1,000. High value is transferred, and the Bitcoin token itself. I mean, the Bitcoin asset on the ledger is worth almost $1,200. It's almost an all-time high. So it's a lot of speculation, a lot of value. Digital gold, to me, is what Bitcoin is right now. And then the third thing, continuing with the metals and commodity example, is like a digital platinum. And what I mean when I say digital platinum is platinum is actually more rare in the world than gold. But for various reasons in the market, platinum was chosen as more of an industrial use. It's used in cars. It's used in other features in our economy. It's less used as a store of value like gold. It's just how the market has chosen it. But notice I say digital platinum, not like digital copper. Copper is a true commodity. It's we can tell it's sort of a cheap commodity all around the world. Platinum is a high value industrial metal. This is the third thing. So again, just to remind, digital currency, digital gold, digital platinum. If that's where I think the real money, the real value is. Like if we get there, like Bitcoin, blockchain, Ethereum, whatever, like that's when you're talking about the pipes of the banking system. You're talking about the transfer value, like notaries using it. You're signing your house over on the Bitcoin blockchain. Like, that's digital platinum. That's where it's basically the pipes of the whole system. So that's a long way of saying I think Bitcoin can be 1, 2, or 3 of those things. The market will decide, but I think right now Bitcoin is firmly like digital gold.
And by platinum, you mean, and maybe I'm just repeating you here, but the concept that Bitcoin is not necessarily just going to be used for exchange pegged against some other currency like gold, whereas it carries true value. People are exchanging it, using it. It's not just immediately converted and used for remittances to their home country, but there's some inherent value in that currency that's more so than just the pegged value. Does that make sense?
Yeah. What I think you just said, I would still apply to digital gold. That's digital gold. What I mean with platinum is a high value industrial application. So it's I guess but platinum, it is sort of platinum is a rare metal that's extremely valuable. Like, sometimes it's worth more than gold per ounce, sometimes less. But it's a high value, rare metal that's used in industry. And the market actually didn't pick it to be a store of value. It's more rare than gold, but the market picked gold as that sort of store of value, medium of exchange. Eventually, obviously now we have paper and central bank fiat money, but gold was used in that way before. But now we typically think of gold as just a store of value. Back to the answer. I hope it sort of gets it. Platinum is just it's an industrial metal with high value. So I don't call Bitcoin. I don't think it's going to be digital copper, like where it's like just basic pipes.
Right.
This is high value. We're talking about people's livelihoods, like the banking system. Signing over houses, notaries, any sort of application where, we know that we need to agree on time, we need to agree on date, we need to agree on value, and it's sort of this use case where it can provide all of these things frictionlessly, globally, at very low cost. That's just what I mean with digital platinum. I'm not trying to confuse it with digital gold. It's just it's sort of the blockchain. When you say the blockchain and other use cases, that's what I mean when I say digital platinum.
Yeah, it holds real industrial value. Do you see that? I think you're also in this really interesting vantage point, being in Eastern Europe, working in finance and called maybe the payments world you've been in. What's the culture like there relative to maybe the States or relative to the Bitcoin cryptocurrency industry? I mean, do you see a lot of, is there confusion? Is there resistance? Are people in the finance banking world, I mean, are they excited about the potential? Do they even get it? Do you think it'll come in and just whisk them off their feet, where startups are coming in and building, Bitcoin blockchain that can do escrow services on your house and all these other things, and all of a sudden they're sitting there with their, they're just totally swept off their feet. Do you think that's, I'm curious to hear your thoughts on that.
Yeah, Eastern Europe is very fragmented compared to the North American banking system, or even the UK or German banking system. But still, most countries, Latvia joined the euro in 2000. I can't remember, 13, 14. Lithuania followed the year after. Estonia was there in 2011. So they're growing. They're adopting. To sort of the SEPA European regulated banking system. But it's very slow. It's much more fragmented. And as far as Bitcoin or blockchain, I mean, it's like crickets out here. I mean, I'm literally out in the ether. This is sort of why I guess I have a strong Latvian accent, so maybe I should be doing the podcast in Latvian. But it's a small market, so I'm sticking with English. But definitely, I think the learning curve will be it's just going to be slow. It's a slow build for the U.S. and China still. So if you talk about Eastern Europe and Russia, Russia's made some headlines. They originally came out against it. Now they're kind of for it. Obviously, there's just geopolitical issues with Russia in the West and Middle East right now, which are their own thing. But everybody is interested in this. And just another point, we think about Bitcoin all the time in dollar price. We don't think about it in maybe the Chinese price, a little bit in yuan. But if you lived in Russia right now and held Bitcoin, you'd have 2.5 to 3 times more rubles than you would have had 4 years ago at the 2013 peak. Whereas in dollars, you'd have about the same, because in 2013, the price was about $1,200, the peak, and right now it's about $1,200. So you'd have about the same in dollars, but in rubles today, you can buy 2.5 to 3 times more because of the ruble's fall against the dollar and the oil struggles of Russia. So, and this is the same story in Venezuela, other developing countries. I mean, Bitcoin is a serious source of value and medium of exchange, but really just a serious source of value for so many people around the world in developing markets that it's just, it's fascinating. And it's definitely, like you said, it's totally overlooked. I mean, it's a speck, like 30 billion. But we can make any comparison. I mean, the gold market's 7 trillion. I think 5 trillion trade a day in FX markets. Euro, dollar, yen. The Panama Papers. People that were hiding money in offshore accounts. I think the upper bound of the Panama Papers was something like 35 trillion. It may have been 30 trillion or something. But trillions of dollars are out there in the 10 trillion in negative interest rate debt. Any number we really want to put out on there, Bitcoin and blockchain assets are just a speck. They're totally small. So I think from one side, you can look at it as an opportunity, but on the other side, obviously, this is bleeding edge. There's going to be a lot more failures before there's successes. So it's very, it's a slow build. But I'm totally optimistic. We haven't even touched on the big news in Bitcoin, which is the block size debate. Honestly,
let's dive into that. So mention what the news is and just give it.
I mean, I don't want to take it too long, but I would say, the big contention in Bitcoin today, the big split between, there's a split in the community, and it's basically some people, the core team, where the most developers are, and the nodes signal this as well. They want Bitcoin to kind of be a settlement layer. You have more of those industrial uses we talked about, sort of the apps, the other payment layers. They can happen off-chain and then settle on-chain. So Lightning networks, things like that. And they need segregated witness, which is a patch to pass. On the other side, there's a side
when you say segregated witness, you're saying that's a third party validating a transaction? Or
segregated witness is actually, it's there's this thing called transaction malleability, which is it's a technical flaw in Bitcoin right now. So though Bitcoin is immutable and the math always adds up, the transaction ID can kind of change for reasons I don't completely understand technically, but it's not completely secure the transaction ID of each Bitcoin transaction, and that makes it very hard to do extra applications on Bitcoin. This is why it's actually one reason I think why all these altcoins are doing well. Now, it just takes a patch called segregated witness, which will fix transaction malleability, will do some other things. It will increase the block size a little bit as well. That's basically one side. They want to do that. I think it's a totally legitimate software upgrade. It should be done. But Bitcoin has this other strong side, and at least from the miner side, it's a strong side that says we don't want Bitcoin to go this. This is sort of a more theoretical developer, not theoretical, but it's just longer term changes. We want to scale today. Like Bitcoin today is bumping up against a limit that was set back in 2010 of 1 megabyte per block. It's like anywhere from 2,000 to 2,500 transactions per block. So every 10 minutes is all that can happen on Bitcoin. It can't happen more than that because there's this limit. And so there's this other camp called Bitcoin Unlimited. They want they want to just increase the block size to 2 megabytes. And that takes a hard fork. The core team, the people that are for small blocks, for segregated witness, for Lightning networks, they say it's too risky. It's back and forth. But
and what drove that?
Yeah, that's the great question right there. That is the question. I always try to look. I'm not saying like this always gives us the answer, but if I can find an economic reason for a debate, I try to look for it. And this debate, in my opinion, is 100% economic. It's not technical at all. All the stuff about segregated witness, all the stuff about Lightning networks, side chains, payment channels, that's great. It's going to come regardless, in my opinion, whether on Bitcoin or another chain. But the thing that drove this whole debate is the locus of it, like literally the core issue is the fact that the Bitcoin blockchain is limited every 10 minutes to 1 megabyte of data coming into it. So miners, they won't be in consensus with the protocol if they would mine a block that is 1.1 megabytes. They won't be in consensus. So they're limited in the number of transactions that come into the blockchain. Now, the reason that happened was years ago, like 2010, Satoshi, who was running the project, basically curating it at the time, he founded it. Everyone was basically listening to him. He was using words like startup, security, we got to be careful. We need to put a limit so we don't get DDoSed, we don't get attacked. There's vectors that could be problematic here. Let's just put a limit on each block every 10 minutes, a limit of data that goes into it. So 1 megabyte he chose. He didn't choose 2, he didn't choose 4, he didn't choose 8, he chose 1 megabyte. This is a very interesting economic case study. To me, this is the whole story. Like, way back in 2010, everybody, as far as I can tell reading the posts, and everybody basically assumed, in the long term, we will raise the block size as we get more successful, more adoption, more scale. The block was a couple kilobytes, a couple transactions in 2010, 2009. So it just seemed
effectively just the block size is relevant because that's when new Bitcoin is released. So that controls the distribution of new currency into the market. That's your mint, effectively.
Absolutely.
Saying, right? Once one block is cracked, then boom, a ton of where a Bitcoin comes out.
Yeah, the first transaction in each block when you win the lottery, it's basically like a lottery. When you throw your hashing power at the network, you win the lottery. The first transaction of each block is the Coinbase transaction, and that is the new Bitcoins that are basically inflated out of nowhere. They're mined, but of course, there's real work that's being done in that. But yeah, like you said, it's this beautiful system of incentives and value that's created, and it's all subjective value for sure. But the core of it, literally the locus of this problem, is the fact that there is a limit on the blocks in the Bitcoin blockchain. So I don't think on-chain versus off-chain scaling is the argument. I want them both to happen. Off-chain scaling happens. Off-chain transactions happen all the time today. Like, I don't know. There's say 600, 700 million in FX trading of the Bitcoin, a digital asset today. I think on-chain transactions of Bitcoin are only like 300 million. So today, there's, on SQL databases all over the world at exchanges, people are doing off-chain transactions of Bitcoin. It's not like they don't exist even today. So I think there's going to be off-chain scaling. I think there's going to be on-chain scaling. But the thing is, it's a massive philosophical, rancorous, cantankerous debate about both sides. But it really is based in economics, and it's absolutely more than technical. It's a block size limit. And one more point on that. Actually, read a couple articles from this German economist. Did a lot of videos about Bitcoin in the early days. His name's Conrad Graf. He's a free market guy. Writes beautifully in English. I encourage anybody to read him. His name's Conrad Graf. He pointed this out a year ago. I've read the article. I haven't posted it yet. He basically called the limit, the first time that he can tell, it's like a cartel-like limit in the free market, this 1 megabyte limit. It's a cartel-like limit on supply in the free market. Bitcoin is, as far as we know, governments had nothing to do with the creation of Bitcoin. Governments aren't involved in blockchain technology. They're looking at it, but they're not involved. So we have a very free market, a very global market in Bitcoin. And this is fascinating to me because that's the story. We're just going to have to see how this plays out with this block size limit. But the very fact that there is a limit, when I say cartel-like limit, don't think that I'm like criticizing one side of the debate or another. This was set back in 2010 by Satoshi. Like if he had picked 2 megabytes or 4 megabytes, we would have just been in a different discussion now. We would, but the fact is we're bumping up. Every block is bumping up against 1 megabyte. So transaction fees are rising. And so it's totally economic. It's very interesting. Cartels, the reason I think cartel is such an interesting word for me is cartels never last in the free market. Like if you collude with another firm, you try to set the price high, someone's going to see that and come in and undercut you. The only cartels that last are government-enforced cartels. The old Adam Smith definition of monopoly is a firm that has special privilege, special license from government. There is, a monopoly back in the day didn't mean like a big company or a company that owns 90% of the market share. A monopoly is a firm that has special privilege from government. And the only cartels that last today are government monopolies. OPEC is one. The Federal Reserve, European Central Bank, People's Bank of Japan. There's another one in money. Utilities, your internet, electricity, that's another one. But basically, all of these guys, they can only regulate supply because they have the authority of government. So, OPEC is the most famous example. That is governments in the Middle East with the explicit intent of keeping supply low so they can have a higher oil price and thus, help their nation's pension funds and, fiscal budget, work out the way they want it to work out. But that is government backing of supply. We have never seen this. This is such a fascinating experiment, and people need to think about this more. No one talks about this. This is a cartel-like limit on the supply of the Bitcoin network. It's economic to the core. There is nothing, of course, there's all sorts of technical risks, and this is technology, it's bleeding edge, as we've said, but Bitcoin can adapt to everything except the 1 megabyte block size. It's just a hard-coded key in the code. There's nothing, it's just an economic limit. So we'll see what happens. That's
such an interesting parallel. It makes total sense. Hold on, I thought I was going to sneeze. They must have seen this coming, right? Satoshi knew that this was going to be an inevitable future. I mean, if Bitcoin only had 2 paths, right? It either didn't work or it would work. In the event that it would work, and more, developers are on it, more and more value is stored here, then we would eventually run into this hard wall. Was that just a accepted risk of the early stage concepts by Satoshi? I mean, is this happening in some blindness where they didn't see it coming?
No, the debate's been going on for years. To keep it short, I'll just say the debate's been going on for years. Back and forth, different implementations of upgrades. No one can come to to consensus. But I would say 2 things. First of all, the long term has arrived. Like your economic textbooks in college, they say the short run and the long run. You didn't know what that meant. Mm-hmm. The short run, the long run. the long run has arrived for this limit. Like it's amazing to see. You can see it on a chart. This is so fascinating about this technology. You can see it on a chart. Just look at a chart of the Bitcoin block size every 10 minutes. You see it bumping up against 1 megabyte. So, and that just happened recently, like, last 3 months when it really started to bump up. But yeah, everybody saw it growing. Everybody knew there was a limit. But unlike in 2010, where I think it was a smaller community, everybody just knew they needed to raise it. Now there's just other ideas. There's just competing ideas. This sort of second layer settlement system, which is which is what they want Bitcoin to be for, say, a Lightning network or side chains or payment channels. It's just different ideas. One more point, though, just to finish up on the long run and the short run, is I think this brings us back to the idea of governance of these chains. Bitcoin is unique in that Bitcoin was the first. No one knew what was going to be. Ethereum sort of saw Bitcoin. They have sort of a roadmap. They've made it. The core team has made it. Ethereum knows what they want to do. Bitcoin, there's no spec. There's no one knows.
Would you call it a vision, like a lack of a vision for where it intersects in the market?
I would say, digital currency, digital gold, digital platinum, but that's just my definition. It's clear that there are two competing visions right now for Bitcoin. But just to get, to address your question about how did they not really address this, they just don't have a way to address it. I mean, miners basically choose every upgrade to Bitcoin, and now you see things like user-activated soft forks where nodes would do more, and other things where they're trying to get the users involved. But still, at the end of the day, the Satoshi consensus is the longest chain with the most hashing power. You mine on that chain. That's the most secure chain. That's just the best way to describe consensus to me. I think, my personal opinion is the word consensus has been distorted. No one really knows what it means. It takes 95% miner consensus to activate SegWit. We're not near there. It's only like 33%, 30%. It would take the Bitcoin Unlimited chain, which basically wants to fork from the current chain. They're saying they want 80% consensus. We're nowhere near there for them.
And consensus in that percentage is indicated as to a percentage of contributing.
It's the percentage of the miners that mine blocks during a specific 2-week period, basically.
Gotcha.
Yeah.
Gotcha.
Basically, the point is that I think is interesting with this debate, along with the economic parallel, like it's just economics, is, we've been able to get by for 8 years in this blockchain world with this idea of consensus. I mean, there's an Ethereum-based company called Consensus. Everybody loves this word. Everybody loves this word consensus. It's such like it's a fun word.
It's a democratic underpinning.
It's a fun word. It's a happy word. Like, it's not a contentious word. And I actually think, other than the Satoshi definition of the longest chain with the most hashing power, I don't actually know what consensus means. I don't think the community knows what consensus means. We're just going to have to see. I mentioned Dash. They have a different system where they have their master nodes, which put a deposit in. They can take it out at any time, but they put a deposit in. They actually make a vote. So it's sort of like a staking model. Ethereum's going to do this sort of staking model after some time. There's lots of different models. If you're really deep in the Bitcoin community, of course, there's a lot of vitriolic debate about all of it. I don't know why people aren't more optimistic about all this, because I think it's going to get solved. One way or another, it's going to get solved. I do think, to sum it up, a contentious hard fork, which would be both sides get what they want, but in an angry way. Basically, well, they don't get what they want. If both sides say we just can't come to means, we're going to split. Bitcoin Unlimited, which is the code that basically would sort of get to a more dynamic block size above 1 megabyte, they would need to split, and the chain would split. It could potentially attack each other. The hashing power, it could potentially be much less on each chain. The security is much less on each chain. That would be the most problematic. The media won't understand that, because if a hard fork happens, there'd be a Bitcoin Unlimited coin, and there'd be a Bitcoin proper coin. That would be bad for the media. That would be bad for everything. So I understand that, like, the depression around that idea,
Mm-hmm.
but at the same time, like, my sort of backstop in all of this is competing currencies, and I think it's great. Like, if you really don't like what's going on, go ahead and create a new government.
Yeah, I mean, you can effectively, you can take currency out of Bitcoin, put it in any other altcoin, effectively no cost and no time. If there's enough, I think to your point, Bitcoin is going to be assessed at a risk of currency just like any other currency on the planet, right? If I buy the US dollar, or if I buy, any currency, right, the Japanese yen, there's going to be an assessment of how likely is the government to back it, how much in debt is that specific country. And so I think similar to that, there's probably the debate here, which if it gets too strong or too publicized, might result in a severe downside of Bitcoin. I wonder to the extent that there's a significant risk of absolute crash. Do you view that as a significant potential outcome at this point? I mean, where we just can't agree, there's a hard fork, Bitcoin security decreases, there's some, publicized media issue of something going wrong, and then all of a sudden everyone's like, oh yeah, remember that Bitcoin no one else uses anymore?
Yeah, I would say the current scenario is deadlock. We can see no clear consensus right now today. The probability is of a disaster scenario where it's a split and attacking, and Bitcoin gets a terrible view in the press. Maybe even a government starts to attack it or something. I don't know. Like just crazy things happen. I think that's a lower probability than the other side, which is nothing at all. Basically, you continue on the status quo. Bitcoin still has 1 megabyte blocks, and that could be fine. Some people call that a feature, not a bug. That preserves Bitcoin's just hardcore immutability from the beginning. You really go to the digital gold route, I think, in my example. You're not digital currency, you're not digital platinum at that point. But then as well, just to give a more positive spin on that, I've heard the CEO of BitPay, which is the largest, they've been in space forever. They're a merchant payment provider for Bitcoin. I've heard them say that the block size could not change, segregated witness could not get adopted, no software upgrade in the code, and they can still do amazing things in the payment space. So for me, I'm not trying to sound myopic. I really think there is a sense of optimism. It's just, it really goes back to, you say this is a digital asset, back up your private keys, you lose 99% of the people. It's just so confusing still for the average person.
Yeah, that's crazy, man.
Yeah.
So let me ask, where can people find you and your work and the blog and everything else?
Yeah, so my website is cryptovoices.com. I have all the podcasts up there, the audio book, as you say, the audio blog where I'm basically narrating experts and enthusiasts talking about this stuff. And I have about 150 charts up. I'm constantly adding. I really love this, as we talked about, trying to look at the economic factors. I'm not a trader. I don't have any weekly charts. These are all long scale charts. So you can really dig deep if you want to check that out. I'm at Crypto Voices on Twitter, and you can subscribe to me on SoundCloud as well.
Awesome. Yeah, that's fantastic. This has been such an interesting show, and I'm sure people will love to check out the details. I mean, it sounds like you've been getting a lot of attention and pull from the conferences, and are you being approached by Bitcoin miners or authorities in Bitcoin for some economic expertise? It sounds like that is the ultimate need there. I mean, there's clearly some guidance that is required.
I do appreciate that, but no, I mean, Bitcoin's going to do what it does. The miners are, as far as I can tell, the miners are the ones in control for now. We'll have to see, but it's been nice to get into the space a little bit. I can say that. I've gone to some conferences. I've actually shown some of the charts that I have on my site that I think, not to toot my own horn too much, but some people have been in the space for a long time. They said, I never thought about it that way. I have a price to sales ratio for the Bitcoin network, which you won't probably see other places, and just things like that. So we'll see how that goes, if that gets some traction. But it's a bit of a hobby for now, just trying to get the good word out. And I'm I've been following it since 2011, and I'm still optimistic. So I think if people get too bogged down in this debate, they're too vested on one side or the other, they should maybe just take a step back. I think it's all economic, and I think we're gonna, this thing's just gonna do wonders in the years ahead. So I just keep following it.
That's awesome. You should chart your optimism over the years. Maybe that'll give-
It's a great point. It's a great point, Mike. I know that many people have gone the other way. So,
Yeah, yeah. Awesome, Matthew. Well, this has been a lot of fun, and I'm sure we'll talk soon, all right?
all right. Thanks a lot, Mike. Appreciate it.
All
Take
right,
care.
thanks.
Bye bye.